Hey everyone, it's Monday morning, March 24th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So last week ended on a bit of a shaky note. Stocks tried to rally but just couldn't keep the momentum going. The S&P 500 gained about 0.5%. The Dow did slightly better with a 1% rise, but the Nasdaq only added around 0.2%. The big question for markets right now? Well, it's tariffs. President Trump's trade plans continue to hover over everything, and investors just don't have much clarity yet. Now, looking ahead, the big data point to watch this week is the PCE index. That's the Fed's go-to measure for inflation, and it drops on Wednesday. Economists are expecting core PCE, that's the version that leaves out food and energy, to have risen 2.7% year over year in February, up just slightly from 2.6% in January. Month over month, it's expected to rise by 0.3%, which would match the pace from January. So, yeah, inflation is still sticky, and that's keeping the Fed cautious. Powell and the Fed held interest rates steady last week and still expect 2 rate cuts later this year. But, honestly, no one's betting on that happening soon. Powell said tariffs are creating more uncertainty and that the inflation bump from tariffs might be transitory. But really, no one knows for sure. And Powell made it clear they'll wait for the data to play out, and that's the mood all around right now, wait and see. Wall Street strategists basically shrugged at the Fed meeting, saying it didn't really change much. Everyone's just watching what happens next with Trump's tariff plan. April 2nd is being called Liberation Day by Trump on social media, but markets still have no idea what that actually means. Meanwhile, this week's earnings calendar is a little quieter, but still includes names like Dollar Tree, Lululemon, and KB Home. And beyond that, we're also getting updates on consumer confidence, the manufacturing and services sectors, and the final fourth quarter GDP reading. And speaking of the consumer, remember that rough retail sales report from January? Well, Monday morning we're going to get another read on spending. Economists expect February retail sales to bounce back with a 0.6% increase. That could help ease some of the recent fears around growth. Still, sentiment remains shaky. Companies like Nike and FedEx just warned that economic uncertainty, including tariffs, might hurt profits this year. That's been one of the main drivers behind the 10% drop we've seen in the S&P 500 recently. Now, some market strategists are saying we've cleared some of the froth out of the market. Citi's Scott Cronert pointed to their sentiment index falling out of euphoria territory, which could actually be a good thing. A more balanced risk-reward setup might give the market a stronger foundation to deal with the economic and policy uncertainty we're facing. So, in a nutshell, we've got a market in pause mode, a Fed that's cautious but not alarmed, and investors just trying to figure out how this tariff story ends. Until we get more clarity, it's all about managing risk and focusing on what really drives the stocks in your portfolio. All right, that's it for today's episode. Thanks for tuning in. See you tomorrow.